Crypto is a game of capital rotation. Wherever there's currently attention, the prices tend to go up. And sometimes we see a clustering of that attention, as in sometimes it's the meme coins that are appreciating, sometimes it's decentralized finance, and currently it seems to be the oracles or the price feeds for the blockchain. Have a look at the following data. This is the performance of various categories within crypto, ordered by what happened in the last 7 days. And oracles are at number 1. Within the space, Chainlink is the leader, and Chainlink thus is also the most viewed cryptocurrency today. It's also appreciated the most. And so roughly 1 week ago, I published a video on Chainlink and it did outperform. The average video is here in gray, and that particular Chainlink video is the line in blue. If you bought Chainlink as a consequence of that video, then feel free to give this video here a like. And in case you haven't yet subscribed, feel free to do so as well. Now here's a mistake a lot of people in crypto do. Most people look at altcoins just in US dollars, like this chart here. Sometimes Chainlink rallies, sometimes it crashes, sometimes it stabilizes, and currently it's relatively high again. But there are several issues with that chart. The first issue is that this is a linear scale, as in percentage changes look very different on this chart. This here is an 800% increase, while this over here is just a 20% increase. And all we want to know is always percent changes, right? How much ROI are we making with an investment? So instead of looking at a linear scale, I very much prefer to look at logarithmic scales. Now the vertical distance over time equates to the same percentage increases. But then there's another problem with this chart. This chart does not consider opportunity costs. For example, if we buy Bitcoin, we tend to take on less risk compared to buying Chainlink. Thus, if we buy Chainlink, we should also get outperformance over buying and holding Bitcoin. The two assets are highly correlated. They tend to move in the same direction at the same time. Thus, the relative valuation makes most sense. This is now Chainlink relative to Bitcoin. And unfortunately, this is not going up for quite a while. This is August of 2020, so this is 5 years of data, and from the top to today's price, Link underperformed by 87%. It tends to bounce every now and then, and currently we are in such a bounce rally. Now maybe the comparison to Bitcoin isn't really fair, because Bitcoin tended to outperform most cryptocurrencies because Bitcoin got bought by the treasury companies. So let's have a look at Chainlink relative to other altcoins. So the Chainlink dominance. How much of the entire cryptocurrency market cap is currently the market cap of Chainlink? That is what is shown in this chart here. And now things look a bit better. Yes, we did have initial underperformance, but since May of 2022, Link tends to slightly outperform the altcoin market. We actually talked about that potential bounce. That was 2 months ago, and the video slightly outperformed the average video. This was the chart. We talked about how the dominance tends to bounce from that support and how there's potential to more supports that might hold, which in the end came true. Right? We did bounce off the support established in June of 2023. Now, the highest correlation of the Chainlink price in terms of volatility is actually with Ethereum, because most of the capital of Chainlink is bound to Ethereum through liquidity pools. So when Ethereum goes up by 10%, then automatically Chainlink also goes up by 10% without ever a single transactioning happening place. Here, have a look at this. This is Chainlink's liquidity pools. They're all versus wrapped Ethereum. So whenever wrapped Ethereum is going up, Link is going up as well. It's the ratio between the two assets that actually determines the price. And so this is Chainlink relative to Ethereum. We've been talking about this for a while. It tends to trade in a range in the last 4 years, and it's now somewhere in the middle of that range. There's still some more upside. Link could outperform Ethereum by another 40%, but it could also go back to its support, which is an underperformance of 50%. So we are somewhat balanced in this trading range right now. The elephant in the room is of course the accumulation of Bitcoin and of Ethereum through the treasury companies and the ETFs. And because of that, Bitcoin and Ethereum tends to outperform most other altcoins. But let's have a look at Chainlink relative to those other altcoins. So this is not a dominance chart, this is a market cap comparison. The Chainlink market cap relative to the market cap of the altcoins that are not in the top 10. And so Link tends to outperform long term. And again, we are not particularly cheap or expensive on the current trend. As a diversifier within an altcoin portfolio, Chainlink doesn't seem to be that bad of a bet. There seems to be constant accumulation, at least that's what happened in the last years. As a counter argument to that is of course the token inflation. Chainlink is still an inflationary cryptocurrency. It's currently at 588 million Link tokens that are circulating, but that can go up at any point in time. The maximum supply is at 1 billion. So we've got potential growth of a bit over 50% in supply. And the demand has to grow at the same rate. Chainlink is not the most speculative asset. In the last 24 hours, we only saw 346 wallets buying or selling the token on the Ethereum chain. However, there are almost 800,000 holders on chain. So most people that get into Link just buy and hold and forget. At least that was true for the last years. It seems like the dynamics are changing somewhat. On the left side, we see the number of retail investors. On the right side, we see the number of whale investors. So to be counted for the chart on the left, a wallet has to hold at least 40 Link tokens. That's currently equal to roughly $100 worth of the token. For the chart in the middle, it's 400 tokens. For the chart on the right, it's 4,000 tokens. So it's $1,000, $10,000 and $100,000 worth of Link. And for all wallet cohorts, we can clearly see how the accumulation has stopped in the last 1.5 years. There was a lot of long-term buying, but for whatever reason, since the beginning of 2024, this has stopped across the board. One reason might be that Chainlink is already quite large. It's already got a market cap of 17 billion. And the next competitor, PIF on Solana, has only a market cap of 700 million, so 0.7 billion. Chainlink is more than 20 times the size of PIF. It's by far the largest infrastructure play. The only cryptocurrencies that are larger than Chainlink are dedicated blockchains, stablecoins, or various forms of Ethereum. There is a bit of a problem with the recent rally of the Chainlink price, and that is leverage. Most perpetual futures traders are betting on rising prices of Chainlink. So the funding rate is positive, the longs have to pay the shorts. And at the same time, we see how open interest on the perpetual futures is at an all-time high. It's currently at $1.8 billion. It has never been that high, and that's of course short-term capital as per tendency. When there's less bets on the price, when the open interest is going down, the spot price tends to follow. And who knows how high the open interest here can go. But at some point, this will again turn around. And yes, right now things are rosy, and yes, there is a bit more upside. Again, a potential outperformance somewhere around the 40, potentially 50% versus other altcoins. But this resistance over here will be extremely strong. And that might be a potential time to short Chainlink versus Bitcoin, Ethereum and Solana versus the assets that currently get massively acquired by Wall Street. And here's the problem. There's just so much correlation within crypto, right? Everything is going up or is going down at the same time. For example, this year, everything went up, but during bear markets or during shorter periods of time, everything can also go down. So it seems like it doesn't even matter that much what kind of altcoin we pick here, right? It seems to matter more what's going on in the macro. Where is capital shifting? Does it make sense to study all of those white papers, to study all of those tokenomics, to study all the details and the founding team and the investors of all of those cryptocurrencies when in the end they all go in the same direction at the same time anyways? I actually have a background in finance. I studied financial analysis and investment management in Hong Kong at HKUST. And over there, we learned about the concept of correlation within asset classes. This is not something that's unique to crypto. This also happens in the stock market. And there are quite smart ways to manage this actually. What we're seeing over here is now an example with the stock market. So in green, this fat green line, that's the NASDAQ 100. But then we've got these other squiggly lines, and they tend to move in the exact same direction at the same time, as we also see with the altcoins in crypto, right? The red line, for example, is Amazon. This pink line is Google. this purple line over here, that's Microsoft. So they all behave the same, even though the business models are really not the same. What I've learned in university is that there's a common approach called delta neutral investing. So we want to bet on an asset, but we want to take away the overall macro environment. We don't want to speculate on where the overall macro is going, if there will be a bull market or a bear market. We are just certain that one asset will do better or worse than another asset. So let's say, for example, here, we've got the Nasdaq 100 in green and we've got Netflix here in purple. And when the Nasdaq 100 is going down, then Netflix is also suffering and vice versa, right? Again, we've got all of that correlation happening. And we don't want to bet on the overall macro. We're just certain that Netflix will do better, for example, right? Let's just play with that assumption. What we then can do is we can go long Netflix and we can go short the Nasdaq 100. So since all the assets correlate all the time, once we go long one thing and short the other thing, we're suddenly canceling out the overall macro environment. So it doesn't matter if the market as a whole is going up or is going down. We are only speculating that Netflix in this example will do better than the rest. And suddenly, when we look at Netflix relative to the Nasdaq 100, we've got quite constant outperformance. And we can also at least get somewhat of an idea at what point in time Netflix might be cheap or expensive. So this is a completely market neutral chart. Just compare this with the Nasdaq 100, right? Those kind of moves to the downside or to the upside are not correlated with the overall Nasdaq 100 chart anymore. The Nasdaq 100 can crash massively while this relative valuation doesn't move much. So we're really taking away the macro. In other words, we don't have to think about anymore where the overall environment is going. Actually, now our idiosyncratic knowledge about a single asset can be turned into money without being exposed to whatever is going on overall. For example, let's say you've got the following thesis in crypto. You look at the different decentralized finance protocols and you think that Aave, as a borrowing and lending platform, has a lot of growth. So this is the total value locked, or the capital that's in the Aave platform. It's growing quite a bit. And your bet is that Aave is better than, say, Balancer. This is BAL. This is total value locked of BAL. It's not growing that much. So your thesis is that because of that, the Aave token should also do better than the Balancer token. Here's the Aave price in US dollars. Sometimes it's going down, unfortunately, because the overall crypto market is going down. But Aave relative to Balancer is not going down that much. It's just going up. This is now on a logarithmic scale. Here's the same chart now on a linear scale. Isn't that nice, right? This is really constant growth. It looks much better than buying Aave directly, right? This is going up and up and maybe down, who knows, based also on the overall macro. And this is what investing is all about, right? We want to get the best risk-adjusted returns. We don't just want to make our 5 or 10x. We want to make this with as little volatility as possible. We don't want to crash 60, 70, 80% in the meantime if we don't have to. And there are ways, again, to mitigate the risk. We can cancel out the overall macro. And so there's another reason why Aave is doing so much better than Balancer. Have a look at the number of circulating tokens over time. This was at 13 million. And yes, over the years, over 4 to 5 years, this grew to 15 million. But still, this isn't really that much growth, relatively speaking, right? It's maybe 20% or so over the course of 4 to 5 years. But then compare this with Balancer, right? This started out at 19 million tokens, and this grew all the way to 69 million tokens. And that happened over a similar time frame. And so this is the perfect setup for a relative valuation bet. This is my preferred way to bet on any market, in crypto, but also in the stock market. The idea is that we don't want to predict where is the stock price itself going, where is the altcoin price itself going. We don't have to predict this because we don't know what happens with the overall market. Instead, all we need to do is we have to say A is likely going to be better than B. And so we go long A, we go short B. And tokenomics, as in an expanding supply in the altcoin market, is always depressing many altcoins. Just have a look at the weekly issuance in the altcoin market that are here tracked by tokenomist.ai. It's almost 1 billion every single week. If there's not 1 billion of additional demand for those altcoins every single week, then the altcoins go down. And so I'm following the strategy already for quite a while, roughly 4 years, and I've also opened a copy trading strategy 1 month ago. Now, due to high demand, unfortunately, I had to close future deposits, but it just goes to show how nice and constant we can make money with this approach. This is now annualized 74%. Yes, it's not a 10x every few months, but it's much faster growth compared to just investing in stocks or even Bitcoin and Ethereum for that matter long term. It's all about risk-adjusted return, right? The maximum drawdown here was 2.6%, while we are analyzed at 74%. So the premium members that signed up on time, they're getting exactly that return. But since the deposits are now closed, most people are now manually trading whatever I do. And so I try not to promise anything unrealistic. Most other YouTubers, they just say, here is the next 5 or 10x altcoin. But those altcoins, more often than not, they simply just come crashing down. I just try to compound the current wealth as quickly as possible without taking on too much risk. And yes, there is a slight learning curve to this, but it's all doable. All you have to do is watch 2 major videos using perpetual futures on Hyperliquid to bet on relative valuations, and then also, at least as important, risk management with relative valuation bets. Because again, you don't want to gamble with 50x leverage your entire portfolio and then lose it all. You want to constantly grow with little volatility because the venture capitalists and the insiders are dumping on retail constantly with their newly created tokens. This is how we make money. We put ourselves in the same shoes as the insiders. We make money like the insiders do. They dump on retail, we dump on most retail holders as well, because most retail holders just buy on spot and hope for the best and then lose in the process. They might not lose as much in the current market where everything is going up, but most people still, even in a market like this, do underperform just buying and holding Bitcoin and Ethereum. After you have watched those 2 videos, I'm simply sharing all my trades as I'm opening and closing them. And you can just blindly copy trade, but of course, ideally, I prefer if you continue learning more and more, because I do believe that crypto is not just a game of luck, it's a game of luck and skill. And the more skill everybody has, the more edge we can carve out of the market, the more money we can win against others. Premium is currently $125 per month. If you don't like it for whatever reason, just message me within the first week and I refund you 100%, no questions asked. If you decide to sign up even for the annual membership, then you will get priority access to the next copy trading pool. So I will open another copy trading pool at the beginning of next year, and all the annual subscribers will get access to that first before it closes, of course. A link to Premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!